Let's take a look now at how the markets are performing on this day. The JSE All Share Index is trading lower, tracking its Asian peers amid concerns that accelerating inflation, which is fueled by a global energy crisis, will not be temporary and weighing on the global growth outlook. Market sentiment was also hurt by fresh signs of troubles at property developer China Evergrande. Meanwhile, investors wait for manufacturing figures for the month of August, and those are due out later. And they should be giving us some additional insights into South Africa's third quarter economic performance. Michael Treherne, who is portfolio manager at Vestact, joins us now to talk through the latest business stories. Mr. Treherne, welcome to the Daytime Update. Let's take a look at the Rand for a moment. It is firmer while the local exchange is under pressure in intraday trade. Talk us through what elements are driving market sentiment.
Yeah, afternoon, Tommy. As you mentioned, global energy prices seem to be the focus of the market today. Oil's at a 7-year high, breaking above comfortably above $80 a barrel. And that doesn't look like to be changing anytime soon, as producers say that they're going to keep a lid on production. As you mentioned, the higher oil prices mean higher consumer prices and lower global growth, coupled with probably interest rate hikes as well. So all bad things on that front. JSE All Share down 0.53% at the moment as I look at it. In terms of the Rand, I think it's just general volatility. Over the last 24 hours, the Rand's rather flat. Over the last 12 hours, it's stronger, and looking before that, it weakened a bit. So emerging market currency, a bit of volatility, these sort of things are normal.
The World Bank says low-income country debt reached a record $860 billion in 2020. What does this tell us about Africa's financial muscle?
So as it stands, most low-income countries were already considered to have high debt levels. In 2020, we saw those debt levels grow by 12%, mostly spurred on by government spending related around COVID. The big worry around here is that a lot of the debt is not priced in home currency. It's generally priced in euros and in dollars. And that means as your exchange rate weakens, your debt burden actually grows. And the World Bank's concern here is that countries are going to land in debt spirals where their interest rates or the interest that they pay on the debt is so high that they can never get out of it, and they can't redirect money towards economic growth in their own country. So high debt levels is definitely a problem, and it's something that the World Bank is hoping to address and look at reducing it through different policies.
Now, according to data that's released by Stats SA, the mining output increased by 2% year-on-year in August of 2021. What is it that underpinned this increase?
So it's the tail end of production pickup after COVID. If we have a look at the July data, it was actually up 13% or 17%, one of the two figures. And it shows you that things were getting back to normal. So August last year, we saw some normality. August this year, we see a 2% increase. That increase has been driven by gold and by iron ore. And that's probably in line with the higher prices that we're seeing for those two commodities, meaning that it's more profitable and more viable for South African miners to export more. So yeah, low base last year, high commodity prices over the last 12 months has resulted in these higher production numbers.
Now, Stats SA will also be releasing the manufacturing production and sales for August. The data is expected to have bounced back. What do you think the main drivers will be there?
So the month-on-month figure is expected to grow 6% for August. And that's on the back of the July figure shrinking by 8% in July. And that's obviously very much driven by the protests that we saw in July and the looting and the rioting. A lot of manufacturers shut down for a week or two, and it's taken them a while to get back up to speed. When you see a shock like that, like we saw in July, it's very much expected to see a very strong bounce back in the following month, and that's what we expected to see in the data out at 1.
We'll leave it at that for today's market update. Michael Treherne, thank you very much for that. So that wraps up today's markets.